QuickBooks Pro Desktop 2021 Pay Employees Using Manual Payroll Feature. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. Here we are in our Get Great Guitar homepage. We currently have the open windows open. You can open the open windows by going to the view dropdown and selecting the open windows list. So we're going to go down here to the employees and we're going to pay our employees. To do so, you should have this set up down below where you have this nice little arrow and these three icons. If you only have two icons down below and no arrow, then it's likely that you have no payroll basically set up, and you're going to need to set up the payroll in some way, shape, or form. Now, we set up the manual payroll in a prior presentation. Remember, I do not recommend using manual payroll to actually process the payroll, but it's a great tool to practice the payroll process. Why don't I recommend it to process payroll? Because you have to actually calculate the Social Security and Medicare tax, as well as the federal income tax, which is something that would be great to have help with because that can be tedious and cause problems. And payroll is becoming more difficult of a thing to do, even if you only have a few employees. So I wouldn't want to manually calculate it, but rather to purchase either the payroll within QuickBooks, which is an add-on feature, which we talked about in a prior presentation, or use some third-party to help us, third-party company. The big two being like an ADP type of company or Paychex type of company to help us with payroll. And as they do so, maybe with the human resources, the kind of needs that we would need as well. Now, remember, I do recommend advice from a certified public accountant or your accountant, someone who you're not considering paying to process the payroll, because then you're going to get some advice that's neutral, and then go talk to these different people like QuickBooks and third parties to see whether or not you want to pick up services such as that. Now, the manual payroll is great for practice because we get to calculate those kind of taxes, and that allows us to see a little bit more detail. In a prior presentation, we turned on the manual payroll by going to the Edit dropdown to the Preferences, and we went to the payroll options here, and to the company preferences, and we turned on this manual payroll right there. And once you do that, if it's the first time you do that, QuickBooks is going to say, do you want to purchase the payroll? And if you're just using it for practice, you're going to say no and turn on the manual payroll. This is a great tool. Now, if you are using the payroll setup for something other than QuickBooks 2021, you can try going to the Help menu here and typing in to get the manual payroll into the Help menu, manual payroll setup. And typically, we used to have to go through that process through the Help menu to actually set it up. You had to actually link through the Help menu to set it up. So you might be able to do that if you have a prior version of the software. So you should see these three icons. So what we're going to do is we're going to select this second one, which is the Pay Employees item. So we're going to pay the employees. You're going to have two dates up top when you pay the employees. We got the period end and the check date. So these two do not have to always be the same. We're going to make them the same in this case. So we're going to say the period end, we pay monthly. So we're going to say we pay monthly. It'll depend on your payment periods, whether you pay weekly, bi-weekly, semi-monthly, monthly. So I'm going to say at the end of 01, 31, 21, and then the check date, we're actually going to write to the check on that same date. Now, that might not always be the case. You might want a little bit of a grace period in terms of the period ending, for example, here at the end of the month, and then give yourself a couple days in your system before you actually process the payroll, and you might have a different payroll period check. I want to pull it into the same to the same month so that we can see it in the same month. So I'm going to say 01, 31, 21. So end of the period and the point in time that we're going to be paying is at the same time. We're going to take this out of the checking account. Now, note that if you process payroll, you may want to set up another account simply to process payroll. And that account, what you're going to do is just put money into it, just enough to process the payroll, and then take the money out of it when you process the payroll. Why would you do that? Because the payroll checks are usually the checks that cause you the most difficulty. They're the most complex checks, because when you write a payroll check, you got to do all these withholdings in it. And if you get that messed up, then you're going to have to go back and take a look at the check. And it'd be nice if they were all in one checking account rather than all mixed up with your other checks. So you may want to do that. It might be beneficial to set up another checking account just to process your payroll checks through. So if there is a problem with it, you can go to it more easily and just take a look at the checks that are simply regarding payroll. And and remember that if there's an issue, many times any kind of lawsuits and things like that are usually the most, unfortunately, a large proportion of them are due to things like employees and payroll and that kind of stuff. So you want to be very diligent with your payroll. Hold on to your records for a long period of time for the payroll. Make sure that you have everything as well lined up as you can with the payroll. Problems with payroll are a pain. Payroll problems are a pain. Okay, so we have the check options. We have the print paychecks on check stock here, or we can handwrite and assign check numbers. For our practice problem, we're going to handwrite and assign the check numbers for the payroll checks. And so then we can uncheck them all or check them all. I'm going to check them off, and then we're going to enter the data into these items. So if I select, for example, Adam Hamilton, we have our data being populated. Now notice Adam gets paid salary, as we talked about before. So here's the salary option, and notice that none of the information in terms of the withholding, which are down here, are populated. That's one of the differences, that if we do this manually, that you would already have them populated if you were to do that with payroll, because the payroll system, if you paid for it, would help you to populate these items. Okay, so let's do that with Excel first, just to see how this kind of works. I'm going to go to an Excel sheet. I will provide you this Excel sheet so that you can take a look at it. And let's just do the calculations for these taxes really quickly. Also note that this is the kind of thing that you would get from like a third-party kind of preparer. I mean, let's say you got your payroll done by like an ADP company or a Paychex company. Then you still need to get it into your system somehow. And you do not necessarily need all the detail for each employee check, because you can go to the payroll company for that information, but you do need the effect on the financial statements, recording the proper payroll expense and so on and so forth for that. So this will be something that you might, kind of similar to our report that you would get, that you could use then to enter basically a journal entry to record that information if it was done by a third party. Okay. So now we're going to say Adam. Adam was a salary paid individual. We paid him $55,000, and I'm going to divide that by 12 because we pay monthly. So we're going to pay him $4,583.33 per time period. And we have the Social Security is going to be Social Security is usually, everybody has to pay Social Security. It's a payroll tax. We take half of it out of the business, and half of it's paid by the employer. So half of Social Security is going to come out of the paycheck. In essence, it's kind of like a flat tax. It has a flat rate up to a certain point, and then it cuts off. So it's typically at this point, I believe, this amount times 0.062. This isn't a payroll course, so we're not going to spend a lot of time on the taxes here, but just generally that's going to be how much we're going to take out of the check. That's the concept. Then the Medicare also comes out of the check, so we're going to say that's going to be equal to the total amount times 0.0145, and that too is kind of like a flat tax with a couple different adjustments to it, which I'm not going to get into at this point, but basically pretty easy to calculate because it's basically a flat tax, meaning a flat rate. We don't have a progressive or changing rate as the tax increases for the most part. There's exceptions to that rule, but for the most part. And then we're going to have the income tax. Now, the income tax is something that would have to be calculated based on the information provided on the W-4. This one is by far the most confusing one to pick up because it is a progressive tax. So we cannot easily calculate it. We can't just use a rate like a flat tax. We have to use some complex system. And this is where paying for payroll starts to pay off. Paying for payroll pays off with the federal income tax because you have to look at basically tables to do it properly, based on the information on the W-4, which considers the marital status and other jobs and exemptions and whatnot. So I'm just going to put in a number here to provide the number. And again, I'm not going to go through the calculations because it's not a payroll course, but just realize that number would be basically calculated for you if you enter the data properly as we went through the data input for the employee, as we did. We entered that data input in, and then the system would basically calculate that for you using the tables. This is not a calculation that's based on the tables here. We're just hitting an example number for it. If you want to take a look at a payroll class to get a better example of this, we do have a payroll class and a QuickBooks payroll class you can take a look at for that. Then the net check is going to be equal to the total check minus the Social Security minus the Medicare minus the income taxes. So that's what we took out of the check. This would be the net check that the employee would then get. These three taxes are really not the company taxes. They are the taxes that are being paid by the employee, which includes not only the federal income tax, but also Social Security and Medicare. Not only that, however, the employer also has to pay their portion of Social Security and Medicare. So this is going to be kind of like a matching, like you might be used to seeing like a 401k plan or something. They're gonna match the Social Security and Medicare. So the total cost to the employer at this point is actually the total earnings plus the Social Security and Medicare that the employer pays over and above the earnings. These three items are being taken out of the employee check, so the employee is getting a lesser check, but the employer doesn't get to keep these items. They have to pay them, of course, to the state. So that's going to be the general idea. Notice that there's also state taxes, but that will be dependent on the state that you are in. So then you have to take into consider state taxes. You might have other withholdings like benefits and whatnot that can be withheld as well. We're not going to get into detail with that. We do have a payroll course if you want to take a look at more items related to that as well. We'll just go into the general stuff here. And then we're going to say that we have Erica. She was an hourly employee. So we're going to say that she worked 40 hours and we earned $20 an hour, I believe it was. So that's going to be $800. And we're going to say the Social Security is going to be, once again, that 800 times the 0.062. And then we have the Medicare we're going to take out as the 800 times 0.0145. Income tax, we're just going to put a number here. Again, we're not calculating this. We're just adding a number because that is the complex tax that would be calculated by the system. We're not going to get into that. We're just going to use an example number here to process the payroll manually. This is going to be the 800 minus the 4960 minus the 1160 minus the 110. That will give us the net check. We will then match it with Social Security and Medicare. This is the employer portion, Social Security and Medicare. Okay, and so then if we look at the total earnings in a total, we could sum this up. Here's the total earnings, and I'm going to copy that across for the rest of the totals. Now, if we were to have a third party enter this into the system, we could then take this kind of register and enter it in either as a total, as a grouped sum, which would simply give us the total data that we would need, or we can enter it by individual check, which might be useful if we're going to have to reconcile, because if we're going to reconcile our bank accounts, we're going to need to see the check so that we can reconcile it. So that might be the way to go. So in other words, if we were going to enter a journal entry based on data provided to us by a third-party payroll, it would look something like this. We can say the payroll expense here would be this amount for Adam, and then the check that Adam got was this amount. I'll make it a negative for a credit of this amount. That's the check they got. The difference between the two is the negative sum or the amount of withholdings that was taken out. So that's what's basically going to happen from a journal entry standpoint. If you don't understand the journal entries, that's okay, but it basically means the expenses are going to go up here, liabilities are going to go up by this, and the checking account is going to go down by that. And then we can do that for Erica. We can say, okay, Erica is going to have a payroll expense of the 800. The check that's going to come out of Erica, that's going to go to Erica, it's going to come out of our checking account, is that. The difference between the two is going to be the sum of the Social Security, Medicare, and federal income tax that we're going to take out. And sorry, the net check is actually that. All right, and then if we were to say this in total, we can treat it as if it was one employee. What happens in total? Well, in total, we can say the total earnings were that. The total checks that went out, if we were to add them all together, the net checks, total net checks were that. And so that the difference is going to be the negative sum of the withholdings. which are going to be Social Security, Medicare, income tax for those items. We can also add them across this way. If we were to add these two up, summing those up, that adds it to the 538333. These two add up to the 124183. These two add up to the 414151. Then we have the employer payroll taxes that we would have to record, which is the employer portion being paid over and above, which would equal the sum. I'm putting it into payroll expense. It might be better called payroll tax expense, but I believe QuickBooks will combine them together. So it's going to be, and I'm just going to enter the total for this one. So I'll enter this in the total equals the sum of the total of the payroll taxes for the two of them. And there we have it. So these are basically the effect on the accounts that are going to happen. So let's go back to the payroll. Now we're going to do that same data entry in here, and notice we're not going to see the effect on the account as easily, but then we'll go and we'll check it out after we're done. So we got this salary's in there. We're looking at Adam now. So now let's enter the rest of the data we have. So we had the salary. Social Security is going to be the 284.17. So Social Security is here. It's going to be the 284.17. All right, and then we have the Medicare 66.46. So that's going to be Medicare. It's going to be 66.46. And then we had the income tax. That's federal income tax 720. So that's going to be here, 720. So that's the amount that's going to come out of the check. I'm not going to be entering any California withholdings or California disability in this example problem. So that will give us then the net check of $628.80. So there's the net check. Hold on, that's not the net check, is it? The net check is the 351271. So there it is, 351270. There's rounding. And then these two federal withholdings, I'm sorry, not the federal withholding, the Social Security and Medicare would be matched down here. So I'm going to have Social Security, this is going to be the employer portion, and the 66.46. So that's how it's going to look. Again, this would already be populated, and the state would have to be populated depending on your state needs. I'm not going to focus in on the state needs because they will differ from state to state. But we have the check, the amount that we took out of the check, this then being the net check, and then this over here is the employer portion of the payroll taxes that have to be paid over and above the salary or the payment to the employee. So I'm going to go ahead and say save and next on this one. Let's do the same for Erica now. I'm just going to pull this from our data that we populated. So 800 hours, or not hours, but 20 hours times 40, 40 hours times $20 is 800 down here. And so now this is an hourly employee. Social Security 49.60 that we calculated. So I'm going to say Social Security is 49.60. We've got the Medicare, which we calculated at the 11.60. So Medicare is the 11.60. And then we got the federal income tax FIT 110. So it's going to be 110. So 110. And that's going to give us the 628.80. 628.80 down here. And then we have the employer portion that's going to match the Social Security and Medicare, which we will put on this side. We've got the employer portion, which is Social Security 49.6 and the Medicare 11.6. So now we have the $800, the amount taken out, 110, 49.60, and 11.60 for the 628.80. Does that match what we have over here? 628.80, yes. And so there we have that, and that's going to be the net check going out to them. These three amounts are going to be included in a payable that we're going to take. We're basically imagining the way you got to think about this is the employee earned $800. We took from their earnings these three amounts, federal income tax, Social Security, and Medicare, out of their earnings, not for our benefit, but because the IRS made us do it in order to, because they made us their tax collectors, right? So we have to be the one that enforces the tax collection by taking that out of their paycheck for them. We so nicely that we did that for them, but we're forced to. We took it out of their paycheck for them, and then we're going to pay the government for them. This over here is our taxes that aren't charged against our income. they're charged against the employee income. So because we have employees, we have to pay taxes based on their income of these Social Security and Medicare. Okay, so now we're going to say save and close on that, and there we have these two employees then being set up. Now, once again, I'm going to check the check number up here to record the check item for them. If it wasn't a check, you might be able to use some other reference number, but I'm imagining here that if you were to print the checks, you'd put the checks in the printer and then print the checks. I'm going to imagine basically handwriting the checks here, or if it's some other payment, you wouldn't want the check number, possibly some other type of reference to do that. I'm going to say it starts at the 1011 because that's the last check number that we are on. I'm going to say continue, and so everything looks good. So I'm going to say print, create the paychecks, and then it says you have successfully created 2 paychecks. That's great. And then print paychecks, print the stubs. So I'm not going to print the paychecks or the stub. Well, let's see if we can look at the stubs. And so here's the 2 paycheck stubs. Now remember that these 2 paycheck stubs you'd still have to provide to the employee. So if I preview these stubs, then they have to be given to the employee. So like if you process the payroll, you're going to give them the net check, or that might be deposited into their bank, or however you do it, of the $3,512.70. But in some way, shape, or form, you also have to tell them, hey, look, we took from you you earned $4,583. We took from you $720 for the federal income tax, Social Security $284.17, and $66.46 for Medicare. We're not keeping that. We're going to pay them on your behalf, because the government makes us do it, to the government for you. Not only that, but we have to get then the year-to-date data and provide that same information on a year-to-date basis, which is the same right now because it's the first check that we have. So you can see after we start to add this, none of this is too difficult for one particular tax, except the federal income tax is a little difficult. But when you combine it all together, even with just a couple employees, it starts to get quite burdensome, especially when we add things like the California tax, and we add other kind of benefits such as a 401k plan, health plan, and other kind of withholdings that could complicate issues. So I'm going to close this. That's why you'd want to pay for you might want to pay for the service, right? That's why I would not use the manual payroll in practice, but it's a great tool to practice with. Okay, so let's go ahead and check I like to check the register after we do that. So to do that, I go to the lists, chart of accounts, and double click on the checking account up top. And then we got the register down below where we have Adam and Erica. There's the 2 paychecks. You can see it indicated by a check. It's still a check, but it says paycheck, right? So it's going to give us that difference, even though it's still a kind of check. If I double click on it, it gives us the check information up top. Looks familiar. Looks like the standard form to decrease the checking account. But down below, it's going to give us the checking kind of detail on it. If I want to see the detail for the paycheck, I can click here, and I'm going to go back to that familiar data input screen. You can't really change these checks, by the way. It's a lot more burdensome if you need to change the payroll check that has already been printed. You typically have to void the payroll check and then do it again. So if you had a problem with this, something was wrong, you're typically going to need to void the payroll check and then do it again, typically. Let's go to the financials now. Report drop down, company and financial. And let's go to the balance sheet and change the dates in the custom report field up top. Let's go to 01/01/21 to 12/31/21, January through December 2021. And obviously we have the checking account going down. So notice this is basically going to tie into our journal entries here. So we've got our journal entries, but we're going to have like the detail of the journal entries. So if I go into the checking account, we're going to double click on it and zoom into there, hopefully. Down here, we got our 2 checks. So we got Adam and Erica. Double clicking on, let's say, Atom. We have the check here. Notice that's the net check. If I was to go to the paycheck detail, that's the net check, not the gross earnings that Adam has. That's what came out of our checking account at this point in time. Now, I'm going to close that out, close this out. The other side's going to go to the profit and loss. So I'm going to hit the reports drop down, company and financial, profit and loss, P&L, changing the dates up top from 01/01/21 to 12/31/21. And now we have the payroll expenses here. So if I double click on the payroll expenses, then you see we have Adam. Now notice we have multiple things here for Adam. This first one represents the actual earnings that Adams has. So Adam, if I click on the paycheck again, earned the gross pay of $4,583, even though we just checked what we actually came out of the checking account was only $3,512. So let's consider that first. I'm going to close this out and close this out. So now we have this amount is the gross amount earned. That's what we are recording as payroll expense, the gross amount that was earned. But we only actually got the money out of our checking account, which was the net amount. The difference between the two being the Social Security, Medicare, and federal income tax that was withheld from the gross pay. So if I close this back out, where does that go? Well, we don't get to keep it. If I go back to the balance sheet, it's going to be in a liability account. It's in this liability account, payroll liability, because we're going to have to then pay it to the government. And we're talking federal taxes here, so the feds. So we're going to go in here and notice we got these three items related to Adam. And so if I double click on this item, for example, that's the 720. The 720 represents the federal income tax. And then we had the Social Security and Medicare. Closing this back out, closing this back out. So we got the federal income tax, Social Security, and Medicare. Why are these two entered in there twice? Because they're also putting in this place the employer portion. So let's take a look at that. Let's close this back out. So that's basically the payroll item. But then we had this, you'll recall, this part that the employer has to pay on top of the amount that we took out of the employee check. That's something that's often overlooked because if we have been an employee in the past, we have seen this money taken out of our check. But most people, if they haven't worked on the employer side of things, have not seen this money that is paid by the employer. So people often will be confused by that. So that means that the employer amount is going to be paid as well. Now, we haven't paid it yet. Therefore, it's going to be increasing this payroll liability. That's why these two are doubled up. So we got the 248. That's because there's another Social Security and then the 6646 Medicare that's related to Adam that the employer has to basically match over and above the amount that was their pay. Closing this back out, the other side of that is going to be on the profit and loss. Now, oftentimes the employer payroll taxes will be broken out into another category called payroll taxes, but QuickBooks by default will typically group them together. So if I go to the payroll expenses, that's why we have these other payroll taxes here. These two items represent the payroll taxes. Now these two items represent the employer portion of the payroll taxes, meaning although these are calculated based on Adam's check, these two do not represent the Social Security and Medicare that was pulled out of Adam's check. They represent the Social Security and Medicare that had to be matched by the employer. And that, again, is something that's often very confusing to people. So when you think of a payroll tax expense on the books of a business, you're talking about just the employer portion of the payroll tax expense. The employee portion of the payroll tax expense is expensed, but not in the form of payroll taxes expense, because it's really just employee expense, because those payroll taxes weren't in theory paid by the employer, they were taken out of the employee check. We, the employer, were forced to be the tax collector and take it out of their check. So this number up here, which is really payroll expense, represents the employee's gross pay, including the payroll taxes. So we're deducting that all together. These two down here, which could very well be and oftentimes will be in the books, be broken out into another category of payroll taxes, only include the employer portion of the payroll taxes. So there are those items. Also, just realize that when you look at this, if you were to record this information from like a Paychex, and they did all the detailed information like a schedule like this, then when you enter it into the system and into your system, then you might have less detail in your system and be dependent on like the outside source, like an ADP or a Paychex, for the more detail of it. And that could be easier or more difficult. As you enter it into your system, you might just have one lump sum journal entry for all of payroll, which means that when you see it on your side, it'll be a lot less detailed. But you also want to think about how you're going to work it into your bank statement to make sure that you can reconcile it. So in other words, if I go back over here, you'll see if I double click on this payroll, you'll see you have a lot of payroll items. And if I have more employees, or if I paid them weekly and I look at this for the whole year, it'll be quite cumbersome, because not only do I have just basically the journal entry, as if, I'm recording just a journal entry for payroll, but I have this detailed breakout for each individual. That's really good, because it's good. We want that detail so we can report it on the paychecks and have all the information and see if there's any problems. But it's also really kind of can be kind of confusing. It can muddy up the books a lot. If you have a third party, again, doing it, then you might be able to depend on an outside system to have all that other detail in it, and be able to limit the detail in your system, in the QuickBooks system, to basically a summary of the report data. And then if you have a question or a problem that needs that detail, you can hopefully rely on the third party maybe to go and pick up that more detail and provide the information that would be needed. So I'm going to close this back out, and let's see what we have thus far. If we take a look at the balance sheet, this is what we have so far. If you're following along, you could check it out and just check your numbers for it. If we go to the P&L, this is what we have on the P&L. We will also open the trial balance, because that's the easiest thing to look at, I think, to just check your numbers. Reports drop down. We're going to go to the accounting and taxes and trial balance, changing the dates up top from 01/01/21 to 12/31/21. And there is our trial balance.